First and foremost, good afternoon and welcome everyone to Access Partnerships FinTech Forum. If this is your first time joining the forum is really a platform that brings together thought leaders from the public and private sectors to discuss emerging policy areas. And for today, we will be discussing financial inclusion to accelerate COVID-19 recovery. And just for some background, I wanted to share some figures and insights about the industry here in Asia. The technology-led financial industry, or FinTech as we know it, is set to bring in about US $11 billion in revenue in Southeast Asia alone, according to the Business Insider Intelligence report. And by 2025, it will account for about 11% of the total financial services in Southeast Asia, which is considered the fastest growing region worldwide. Now, even as consumers ourselves within the region, we've seen a slew of payment platforms being provided and digital banking services being introduced, from ride-hailing apps to e-commerce firms, each providing their own e-wallets types of services. And basically what each platform tries to do is to attract users that are already using their services on their platform and create a user base for their own financial types of offerings. And commercial banks, not to be left behind, we have also seen them launching their own e-wallets, and in some cases, they also work with other super app companies. So for example, in Thailand in 2019, we saw the Kasikorn Bank partnering with Grab to introduce an e-wallet service for their unbanked clients. In Indonesia, a bank called Bank Jago also worked with Gojek to introduce some of its financial services on the company's platform as well. So it's really a thriving industry here in Asia. Now, to unpeel the topic of fintech, financial inclusion, and COVID-19 recovery, we have here with us today three experts on this topic. We have Dr. Vacharakul Jivakanon, or VJ, who is the Deputy Director of the Payment Systems Policy Department at the Bank of Thailand. He's responsible for payment systems policy, strategy, and development. We also have Alisa Eskinson, who's the Vice President for MasterCard Center for Inclusive Growth. Now, Alison is a seasoned international development executive, having worked for 17 years at the intersection of development and finance. Last but not least, we have Katie Mitchell, who's the Vice President, Global Head of Government Relations at NEUM. She's building and leading the global government relations at NEUM to bring the future of financial services to more people, businesses, and economies. So I thought we could kick off this session today with a short introduction from each of the panelists. Let's keep it to about 10 minutes each for you to share a bit more about what you do, about your role, and also to share your views quickly on really promoting financial inclusion to accelerate COVID-19 recovery. I thought I could start with VJ.
Good afternoon, everyone. As you introduced me, I am Vacharakul Jivakanon. That's very long for some of you, so people call me VJ, so that's easier for all of you. So I'm from Bank of Thailand. So my responsibility now is on the payment system policy and payment system strategy. And one of my hot topic now is on about the data analytics. So Bank of Thailand gather a lot of data, and we're trying to also gather transactional data to get more information about payment behavior. And for that, we see a lot of change during the COVID-19 pandemic. Let me first start with the bad side, let's say the negative side of the COVID-19 pandemic. So we all know that the COVID-19 pandemic has affected the global economy. It affects you, affect me, affect every one of us here. And especially in some sector, it has been affect a lot. So for example, like airlines, hotel, restaurant, it's affect a lot. And behind that, there are thousands of people behind that industry, right? So affect industry, affect business, affect people behind that. I told you before, I do see the data analytics. So in my 20 years experience in working in payment system area, I never seen the sharp drop in the industry like that before. So if you look at the airline, hotel, and restaurant that I mentioned before, we see the sharp drop of the performance. So that's bad side of the COVID-19 pandemic. But on the bright side, in every crisis, there's always an opportunity. On the bright side, the COVID-19 pandemic is like the game changer for digital financial services and payment. We can say that it forced a sudden shift from physical into digital. Okay, we see a lot of people trying to be online, trying to order food online for the first time. We see many people trying to buy things online for the first time. And in Thailand, even they can do the e-donation. We call it e-donation. You can donate online. So every economic activities now move towards online or digital platform. So that's the force from the COVID-19. Not only people, but also the business. They have to also change their strategy, because if they don't change, they die. So in order to survive in this crisis, they have to change. So for example, like restaurant, in the past, maybe they never have a delivery before, so then they have to change their strategy to provide the delivery services, for example. So that's the positive impact of the COVID-19 pandemic. But in Thailand, and I think this is also happened in many countries, cash is still there. We always get used to cash, and people think that cash is always around. One factor for me, I think, in implementing any policy, the most difficult thing is to change customer behavior, because this is like you have to change million people behavior, so it's not easy. One thing that is impact that is the literacy, because people doesn't have literacy, they don't know enough, they don't feel confidence, or maybe they don't know, so that's why they don't want to use or move to the digital platform. One good example in case of Thailand, that in Thailand we have about like almost 90 million credit card, debit card actually. But the behavior that we've seen is that instead of using that debit card at the point of sale, they walk to the ATM machine, get the cash, and bring cash to pay instead of pay at the point of sale. So that's kind of thing. So when we ask them why you don't use the debit card, 40% said they don't know if they can use that card to buy at the point of sale. So that's the literacy. Number two and number three is about the security and also like the incentive. For example, like instead of using debit card, they go for the credit card, which give them more points or that kind of promotion. So again, let's come back to the first point, which is 40%. They don't know, and that's because of they didn't have literacy. So before the COVID pandemic, I believe it's very difficult to change. We need to increase the literacy level of the people. But because of the COVID, I was wrong. It's proved me that I was wrong. Because if you have incentive that is high enough, it can change behavior. If the incentive is high enough, people will find the literacy themselves. You don't need to try your hard to give the literacy to people. If incentive is high enough, people will learn how to use the digital platform. And a good example is the government program. Because now in Thailand, we have a lot of government campaign just try to help people and help business. For example, like we have like 50% co-pay. When you pay for 100 baht, for example, government will pay 50 baht for that. We have like the domestic travel subsidy program, we have cat support program, and all of those campaign or of those relief package will send through the government e-wallet. So what happened? I would try my best to get that government e-wallet, because if I don't get that government e-wallet, I won't get the money from the government. So this is a very big incentive. So we see a lot of grandma, we see a lot of auntie that we never expect them to use a digital payment. That grandma, grandpa, auntie try to learn how to use the government e-wallet. So now if you go on the street, if you go to the supermarket, you see a lot of grandma, grandpa using that government e-wallet even faster than me. They know how to click, they know how to pay, they know how to collect the points, for example. And that because of the incentive that's high enough. So in the past, I say we have to try our best way to educate, to literate this group of people. But now we don't need to do that. They find a way to know how to use this kind of platform. So this proved me wrong that literacy is important. Now the most important is the incentive, and this is a very good example in the case of Thailand. I have to conclude in that is like these things is not just to recovery from the COVID-19 pandemic, but this is like the way to increase the resilience for the next coming crisis. Hopefully it's not, but for the next coming crisis. So I would say like this kind of thing, this kind of behavioral shift is not just the recovery, but it's the way for the resilience.
Definitely. Thanks so much, Vijay. That was a very good sharing. I think we can all learn from the Thai government on how they actually learn about consumer behavior and then incentivize them in a way that really encourage them to leverage different types of payment methods nowadays. Definitely a good insight for our discussion today. Next, I would like to invite Alison. Alison, please.
Thank you. BJ, I have to say, I love what you said, right? So the idea that you are thriving, you're not wasting a good crisis, right? Like, of all the horrible things that COVID has caused, this has created an opening to drive use cases, to change behavior in a way that's meaningful for the population and certainly good for engaging into a globalized digital economy. And I think that's fantastic. I'm Alice Maskison, and I run the MasterCard Center for Inclusive Growth in Asia Pacific, which is the philanthropic hub of the company. And so MasterCard, as you know, is a technology company in the payment space. And the philanthropic hub is actually meant to leverage all the different assets that the company has, including its philanthropic capital, to really think about how do we drive economic growth that's inclusive. And when we think about that, we really see two big pieces that are challenging. One is the income inequality gap that's only rising, and COVID and the pandemic and shutdowns and how that's disproportionately affected some people worse than others really just shows the fragility of where we were before and the need to really refocus and think differently about how we want to build back in our economies. And then the other challenge that we see that BJ also touched on is this digital divide, right? That information is incredibly powerful, and fintechs are uniquely positioned to help unlock insights and to drive impact while also being commercially sustainable. And we really see fintechs as an opportunity to build an economy where there is greater equity and equal access to opportunity across those who currently have and those who currently do not. And so to just give you a couple, or maybe one idea of what we're doing, which builds a little bit on what BJ said in terms of his ability to see all the transaction data. MasterCard also sits on a lot of transaction data. And so we realize that one of the ways in which we can take that data, which is one of probably our most valuable asset, and convert it into something that can drive social impact is an inclusive growth score. And so we pilot this in the US. It is now launching in the United Kingdom. It's about to launch in Singapore and also in Brazil, and hopefully in Australia as well. So we are slowly but surely expanding to different markets. But the inclusive growth score leverages both our proprietary data as well as publicly available data, so data that the government has. And we layer in all those different types of data to be able to show from a geographical perspective, how does this city compare to that city in a country, and how they implement policies? How does racial diversity compare? How does income inequality compare? And then we bring this toolkit, which is open source, and we make it available to civil society organizations so that they have more information. So as they're advocating for the communities that they represent, they are coming at it from data-rich standpoint. And we've also partnered with think tanks, global ones like the Brookings Institute, but also much smaller ones, to help them with research insights that they can then work with civil society as well as with policymakers to really explore how do we affect change that's meaningful, that's at scale, that really does create economic growth that uplifts across a variety of different segments of society. And so some of our research has been really interesting with the Brookings Institute, where they look at industries and say, how do industries grow and what are the ancillary services that they need to really be successful, so that you aren't seeing gentrification, but rather a more vibrant, thriving economy. And so these are ways in which we think about how do we use our own assets as well as our philanthropic capital, as well as our network, right? Our customers are incredibly important and span the entire world. And so when we work together in collaboration, we know that we can drive financial security in a way that's meaningful. And COVID has just exposed how fragile that our economies were before. Even though we knew there were gaps, those gaps have been exacerbated. And so together, we're really looking to say, how can we create programs that are evidence-based to better affect and change at scale? I'll stop there and let others speak as well.
Thanks so much, Alison. I think Alison brought up a very good point about digital divide, and I think we'll come back to that question later on. Katie, would you like to introduce yourself as well and share your views on the topic itself?
Yeah, thank you so much, Seha, and thank you to Access Partnerships. I think already we've seen how valuable convening these different perspectives are to the challenge at hand. We have an innovative regulator and Bank of Thailand, a prolific global payments and technology player in MasterCard, and then I work for Neum, which is a disruptive and collaborative fintech that's born here in the Asia Pacific region, but pretty global in reach. So I think to tee up the rest of our conversation, I'd like to share some reflections on what we've observed throughout the past year and ongoing with COVID and the role that fintech can play in creating more resilient and inclusive economies going forward. One thing that, as Allison and Vijay both noted, is that COVID really gave us the opportunity to hold a mirror up to society and to see, where are we succeeding, where are we making good ground, and then where are there some gaps. So I think it's important to recognize some of the good traction that we've had so far. And a lot of that is a testament to the innovation and the investment that regulators like Bank of Thailand and others have made in digitization. Here in the Asia Pacific region, we've seen smart cities, smart nations, digital economy blueprints. We even had the ratification of one of the most groundbreaking digital trade agreements signed virtually in the middle of a pandemic. So that's just cool. Next is real-time payments that allowed governments to disperse funds and create a channel for life-critical financial services quickly and efficiently in a way that perhaps 5 years ago we wouldn't be able to tap into in the way we were during the pandemic. And then lastly, in terms of the win column, we've talked about some of the big players at the onset, Seha, with Gojek and Grab, but the strength of the gig economy here in the APAC region, I think, is really notable. It's gained traction over the last decade plus, but I would say that 2020 is the year where we really saw the gig worker as an essential worker. And I can certainly think for myself where that was true and where I relied on the benefits of the gig economy. But it just shows how kind of that freelancing model creates a huge opportunity for economic empowerment and digital financial inclusion that we should continue to invest in. But like both Vijay and Allison noted, there are these really present gaps. Allison, you mentioned the digital divide. I think that that's certainly true as we moved to home office environment, homeschool environment. Not everyone has equitable access to broadband internet, and a lot of what can be masked when you convene in these community environments in an office or in a school became much more obvious whenever we migrated and brought those environments home. So that's something that we need to invest in. And then when it comes to that digital divide and financial inclusion, certainly the unbanked population can't tap into a lot of the progress that we've made on digitization. And I think that where that's really, really true is the gender divide. So Vijay made some really great remarks around how the travel industry was impacted by COVID. Women tend to be employed by a lot of the impacted industries, be it travel or professional services. They also happen to be the recipients of a lot of inbound remittance funding. And one thing that the UN has noted is that from 2020 and then what they project in 2021 is that in developing countries, there will be about a 7% dip in remittance. And that's really essential for a lot of people to carry about their lives and continue to progress financially. So those are gaps that we need to address immediately, but then certainly in order to buffer ourselves, should there be another kind of crisis moment. But what I'd like to do now is kind of talk about FinTech, the role that that plays, and then also introduce everyone to Neum, which is where I work. So I'm the head of government relations at Neum, and in that, part of what my remit is to talk about these opportunities for collaboration with regulators, with private sector, and to address some of these opportunities across the globe. We're a financial services platform, and in particular, we provide a stack of embedded finance solutions. This is a super buzzy topic that you can Google and see a lot of information about, but the way that I would simplify it is that think about going to a restaurant and you might have a set menu. So you pay your fee and you get whatever the restaurant offers, and then perhaps you might order a few a la carte options. What we do is we deliver financial services and payments, all the complexity, all of the investment, and we compress that into one API. So you can go ahead and access that set menu of financial services, or you can select what you need. What that in turn means, and what it means for weathering crises like COVID, is that embedded finance democratizes financial services and financial inclusion. So it's not incumbent on just the banks or just the fintechs to be the ones who touch consumers and businesses, but anyone can be a fintech. To make that point a bit more material and relatable, I'll give you an example of a partnership that we launched, why I think it's really powerful. We have our roots in a remittance business and continue to run that through our consumer vertical, Instagram, but we've offered a broader set of financial services through our stack. And most recently, we've partnered with BSM, which is a maritime company. So I'd like us all to imagine a ship worker. Maybe he's from Thailand. Let's say his name is Jet. So Jet's from Thailand. He boards a ship in Hong Kong. That ship might travel from Hong Kong to Singapore, to Dubai, and land in Germany as its final point of destination. Throughout that, Jet will receive his salary. The captain has a huge wad of cash that he carries in his wallet. He'll leave the ship to buy a few things, and he'll send money home through an informal or costly channel. Through our partnership, that whole experience is digitized. So BSM, which is truly just a maritime company, now becomes a fintech. They can execute payroll and provide funds into their ship workers' accounts or wallets. And that ship worker can access a multi-currency prepaid card that they can use along their journey, and they can remit money home safely and securely. This is super important in an era where physical movement comes to a halt, but it's also really important for financial inclusion and resiliency going forward. And it's just one element of the role that embedded finance players can play, and also the role that fintech can play in, as Allison said, and the current US president said, in building back better. So really excited to have this conversation, and thank you so much again for the opportunity.
Thanks, Katie. I think it's a really good case study, especially for maritime workers who tend to be one of the more vulnerable workers that's out there. And it's great that we have a service that can help bridge their financial inclusion and ensure that they're able to remit money in a manner that's fast, efficient, and trackable as well. I wanted to circle back to some of the points that the speakers have mentioned. First and foremost, I wanted to go back to Vijay's point. So he talked about how fintech, besides the bad things that happen, I think one of the positive things is that it's driven consumer behavior in a different way, and it drives more consumption of fintech solutions, or e-payments, e-wallets types of services. I'm actually wondering, because are these accelerating activities around fintech driven by COVID-19? And will it sustain post-pandemic, or is it part of a longer-term structural change? I would love to hear the views of all our panelists today about this question.
Let me start first. I think the development of fintech is on the longer-term structure change. It's not just because of the COVID, but the COVID is like the big influence that push up the fintech in this period of time. I think fintech solutions and services will make the sustainable recovery for the COVID-19 because they provide, let's say, the comfortable customer experience, UX, UI, and that is the very important impact that will increase the financial inclusion. Because now, as I told you before, it's all about literacy. It's also about experience. If people doesn't have a good experience on using this kind of fintech or this kind of digital platform or digital devices, then it will be just one time. They won't do it anymore. This is also our challenge. I mean, if I go back to the thing that I mentioned before about the government policy, one challenge of the government is that how to keep that momentum, because we are afraid that once the government doesn't pay or doesn't give the money to the government e-wallet anymore, then people will not use the government e-wallet anymore. So that's the thing that we are worried about, how to keep that momentum, because they know how to use the devices, they know how to use the government e-wallet, but how to make that sustain. So I think FinTech will come and help in that kind of thing, because they can help people to use that more easier, for example. And the role of FinTech is also very important to increase the level of financial inclusion. For example, like in case of Thailand, we have one FinTech application called Recount, and that's a digital financial solution for farmers. And this is very interesting because in that application, they use the satellite data, they use the weather data, and they use the AI and predictive analytics to tell farmer how to harvest. What is the good time to harvest? Where is the location to harvest? So that increase the productivity for the farmers. And that application linked to the financial institutions. For that financial institution, we have a better data, a better, for example, like potential. They see who is a potential farmers from that app. So that kind of thing will increase the better access for the farmer. So that's kind of, we call that a very good circle, right? So that application, one application itself can increase a lot of financial inclusion for the people, especially the farmer, which is the group that we don't expect to have a very good financial inclusion. So that's the beautiful of the fintech in my view.
Thanks, Vijay. I think Vijay brought a very good point about the farmers, how fintech is actually even helping the more traditional types of industries and really innovating the way they have access to data, the way they have access to financial equity as well. I think another good point that Vijay brought up was how do we actually sustain this consumer behavior once these subsidies have sort of dried up? I think he brought up a good point about consumer or customer experience on the applications. I was wondering, Alison and Kitty, with your experience in providing these types of services, what do you think are other factors we could think about to drive and continue and sustain that interest in fintech solutions?
Yeah, I think user stickiness is really important. This is a moment where we are seeing changes in behavior, in part because of necessity. So when that necessity goes away, how do we continue to sustain it? And quite frankly, if you look at demonetization in India, there was an exogenous or a shock where they forced people by pulling currency out to start these digital services. That as currency, the lower denominations currency flowed back in, you very quickly saw people revert back to their previous ways. You can make the argument that the pandemic has lasted a whole lot longer than anybody would have hoped. So maybe that stickiness is already embedded. But I think to your question, it's certainly experience. I think it's also the value proposition, right? So if it's done out of necessity, when that factor disappears, then it's very easy to throw it back. But if there's a value proposition that it's, yes, necessity might have brought you to that digital service, but you actually find that it's easier to use, it's more convenient to use, and you have additional functionality, it saves you time in terms of just movement, or it saves you time in terms of things that were just inconvenient and a hassle to do before. All of those are reasons why you would want to continue using it, because you've already overcome that biggest hurdle of trying to figure out how to use it, right? Like that literacy piece that Vijay talked about. I think one other piece that's really important that we don't talk enough about is all of these digital services need to be safe and secure. And there is a cybersecurity element that is easy to overlook until there's a real cyber attack, and then it's overwhelming, and any potential for stickiness disappears immediately. And so we should not underestimate how important that job is of ensuring that all the different types of digital services, particularly those that are for the base of the pyramid, have sufficient and consistent investment in upgrading and protecting the users. And they're sort of the unsung heroes, right? When things go bad, everyone's quite upset, but if things are going good, you don't notice that they're there. And that's a piece that I think we should always be worried about, because without it, you'll never truly see a digital economy that works for everyone.
Yeah, I thought it's a good point on the security aspect. The thing is about cash. If you lose, your cash, you probably won't blame the bank. But if something happens on the fintech application, and whether it's because of your own user behavior, your own cyber hygiene, they will all point back to the service provider and say that, hey,
Yeah.
you guys have not done enough. So I think that that's part of the psyche that we'll probably have to deal with. Katie, I'm not sure whether you have anything to add.
Yeah, very quickly. I mean, I think that both of the fellow panelists made fantastic points. I would totally agree that COVID is an accelerant of a trend that was already well underway. And I think that what's interesting about embedded finance and players like Mume is that it allows more companies to meet consumers where they already are, rather than seek out new users. And so what it is we all have these lives, and some of our lives are already digitized, but there's definitely a move to digitize more of what we do every day. And payments is part of that. And we hope to make payments invisible and frictionless. Security is tantamount to that, obviously. And so what embedded finance allows us to do is to have these unlikely players step in without the cumbersome capital investment and time it takes to build a whole FinTech or to build a whole payments network, and impact their users, impact their consumers, impact their employees in a really inclusive manner. So that's what I'm really excited about. I think that this was a trend that was already underway, but we saw how existential it is for us as individuals and as economies to really fulfill this digital journey that we're already on.
Yeah, I think that's really important. Helping basically companies, SMEs who don't have a lot of resources, and help them jump ahead of the learning curve and immediately able to drive value for their end consumers. And the other topic we wanted to go back to is actually on the issue of digital divide. So we did talk about, for example, in Thailand, Vijay mentioned about 40% of the people are still illiterate. Alison also mentions about digital divide as well. So there are some figures that I found by the Boston Consulting Group, which found that among Southeast Asians, even though e-wallets are intended to bridge financial inclusion and ensure that unbanked consumers are inserted into the digital economy as well, only 13% of Southeast Asians unbanked urban population are actually using e-wallets. And out of those, more than 8 in 10 of them are actually urban consumers. So actually the percentage of unbanked consumers whom we have managed to convince to use FinTech or e-wallets is not that much. So I think this begets a question. So we're talking about digital divide. Does it mean that FinTech success is actually hinged on connectivity? Do you think connectivity is probably the reason why we're not getting as many unbanked population to join into the digital financial industry? Or is it the other way? Do you think FinTech can actually drive connectivity developments and drive demand for that? Anyone wanted to take up this question?
Yeah, I mean, I think that's a really great question. And early when I began working in payments over 10 years ago, there was always this thought around what's the on-ramp to financial inclusion? Like, how do we actually access the financially excluded? And I think that that's a really important question. But what happens is then you really focus on these particular verticals. And I'll go back to remittances, since that's where we really have our birth story. If you just focus on digitizing remittances, that's one element of what a consumer does every day or what a business necessarily needs to do every day. I think true financial inclusion is having that access point, but then certainly availing your user of a lot of different experiences throughout their lives. So that might then mean making payments, receiving payments, etc. That comes again from having a really compelling application and/or, like I've said again, meeting the consumer where they are today. So I think that one reason why we continue to have maybe that's users of e-wallets is that it doesn't necessarily meet an urgent need, but I would suspect that we're at the precipice of that changing, and that one of the key drivers of that will be banking as a service.
Thanks, Katie. I'm wondering that Alison and Vijay had anything to add.
Right. Let me first correct you first, because you said like 40% of Thai people is illiterate. My boss is going to kill me if we conclude in that way. So in that 40% is particularly for the debit card. Why you don't use debit card? So that 40% that they don't know that they are carrying debit card. So to answer your question about the connectivity. So in case of Thailand, we believe that infrastructure is already there. Service is already there. Connection is already there. But the main factor is not about that. It's about literacy, as I said. So you have your device in your hand, you have connectivity, you have everything in your hand, infrastructure is there. But if you don't use, you don't use. But why you don't use? Because you don't know, because you don't trust, or because you think that other way of payment is more, get more incentive. So that's kind of thing. So I believe the major factor is about literacy and incentive.
Yeah, I think it also depends, right? ASEAN is not a monolith, right? So depending on the country, I think connectivity might be the first challenge or first hurdle you have to overcome. In other countries, I wonder actually if it's smartphone penetration versus feature phone penetration, right? So as you leave urban centers, you start to see that it's much more feature phone. Honestly, I think that's just a waiting game. The cost of smartphones have come down so substantially that you go to rural parts of almost any country, and it's actually hard to even buy a feature phone just because why would you, given how cheap smartphones are? So that feels like it's just a waiting game. I think the other part of it that we haven't mentioned is gender and looking at the implications of women versus men using smartphones, and women oftentimes having smartphones that are more of a family phone rather than their individual phone, which then inhibits their usage of that as a business tool, but also in terms of accessing financial services. And then to pick up on something that BJ said around literacy, we believe, and when we think about how do we drive philanthropic programs, we feel strongly that training in and of itself is insufficient. You really need to do training at the same time that you're making access to either a financial service or a wallet or a G2P payment or a remittance or new market opportunities, like sort of onboarding onto a marketplace, that whatever that opportunity is, that's the moment when you provide training. Because that's when a time-poor entrepreneur is looking at it saying, all right, like now I need to make a decision. Do I do this? Do I not do this? And that's when it's most effective and most influential. And that if you provide training in a more traditional approach where you're doing workshops, and it becomes almost academic, and it becomes an exercise around sort of what would I do if I had lots of disposable income versus, no, I have a little bit of money right now. I have to make a decision. Am I going to try to save it? Am I going to try to put it in a wallet? Am I going to just stick it in my pocket? And we feel strongly that when you pair training with just-in-time services, that all of a sudden you unlock this incredible synergy and empower entrepreneurs, people to make the decisions that are right for themselves in that moment, as well as decisions that they can plan for, right? That they then start to say like, okay, I can make the connections in my head. And people are smart, right? That just because you're in the base of the pyramid doesn't mean that you're not smart. You know exactly how you spend every single penny in your pocket because you just don't have that ability or that cushion to spend frivolously. And so doing something that meets the customer where they are, and like to steal a phrase that Katie used, I think is really important. But even when you're thinking about the literacy part.
That's a good point. And in fact, I think what you've just mentioned, Alison, is pretty similar to what VJ mentioned about incentivizing people. And, instead of waiting for them to be ready, basically the incentive in this sense is for SMEs to realize that, hey, you can easily offer or gain more customers just by implementing this solution. So I think that's really important takeaway for today. So we've talked a lot about COVID-19 impact on FinTech. We've talked about digital divide and how we address that. I think the other question we'd like to talk about is actually on the policy area. So in terms of the financial services, as we all know, it's a heavily regulated industry. Yet fintech itself is all about innovation. It's about moving very quickly. So it's kind of a conundrum, or tugging at each other, different priorities. So I think VJ, from your point of view, really, what are the key priorities? What are the key concerns you think that regulators have over fintech services? And for Katie and Alison, I think the question is, having worked with SMEs in the region, some of the mom and pop shops, what do you think are important policies to spur further financial inclusion? And that may link back to what you guys have mentioned about, the gender gap as well.
Right. Let me start from the regulator perspective. So I can say, I think, on behalf of the central bank around the world, that is the most difficult task for the central bank is how to balance innovation and stability. That's the most difficult task, because if you, promote a lot of innovation, but that maybe also affect the stability. My ex-governor always comparing this as a party. For example, like we are in a party, people are drinking. We are the one that taking glasses from their hands. People will hate me. People will hate central bank. But that we care about all the people. We care about them, the ecosystem. We want to make the ecosystem safe. That's how we see it ourselves like that. So some people we had as, for example, like innovators, this kind of thing. But that's the role that we have to play. But now we know that innovation has come into this period of time. So we create a sandbox. We create an environment that also like to promote the innovation. So we try our best to also promote innovation and also to promote the stability. But again, that's the most difficult task for all the central bank around the world.
It's such a good analogy. I love the party and the being the party pooper. I'm not certain what the right balance is. And I think BJ pointed out, right, like it's a little bit trial and error, right? You go too far, party dies. And you don't go far enough, everybody has accidents and you have no friends the next day. All right, so like, where do you find that right balance? I'm not certain I have the answer to that. I think when we think about how do you help small businesses to succeed, we do see that fintechs can have a role. And some of that is around alternative uses of data, to go back to something that we talked about earlier. And I suspect that if you're a regulator and you're looking at policies and what's really the outcome that you're looking to drive, that helps to create a focal point for the policies that you're going to implement, and then where's the right balance between sort of over-regulating and under-regulating. I'm not certain of that, but I think if you're focused on that outcome of what you're looking for, and then innovation can take hold. And to give you an example, one thing that we've done in Kenya that we're replicating in Asia is looking at fast-moving consumer good companies, right? So FMCGs, and how they have data on very small mom-and-pop neighborhood shops, right? And they have so much sales data on a weekly basis that we actually partnered with one of them to say, okay, if we can engage one of our customer banks to lend against this sales data, which augments what would have been considered a small businesses sort of thin file. In fact, they're not creditworthy, right? Like in bank size, they're just not creditworthy. But if you're willing to lend against sales data from this huge FMCG company, it adds a comfort to the bank. And can they start out with very small supplier credit and then build that credit history with that small business so that additional financial services are offered? And we found that was extremely successful, and participating small businesses saw an increase in sales of 10%, just because they weren't bound by, today I can buy soda because that's how much cash I have, that I know a holiday's coming tomorrow and I actually would have loved to buy potato chips as well, but I can't because I'm just bound by how much cash I have today. So they were able to forward plan. And what we did there is we provided training to the small businesses, to those mom and pop shops, around how to use credit productively, right? Like how do you make certain that you're borrowing and using that loan to purchase things that are going to move at the same speed as your amortization schedule, right? And we found that was so successful, and it was all digitized that we can now start to replicate it in other countries around the world. And I think that is an example of innovation and alternative data. And what we did, because it's important to us, is ensure that there's a whole privacy component built into it, so that the store owner decides whether or not their data that the FMCG has could be used for alternative data. And so that was something that we took on ourselves. And it wasn't regulated, although in other countries it would be a little bit more regulated. But I think that it's an example of sort of where's that fine balance between policy, regulation, over-regulation, and facilitation, right? And it's kind of that circle of you go a little too far, and how do you come back?
I'd love to share the FinTech perspective really quickly because I really appreciate the analogy that Vijay provided. And, it's don't worry, FinTechs don't hate regulators. But I think it's an important conversation to have. And, we're in an era where technology is making possible more elegant, low-cost, accessible solutions. And I think that there is a real opportunity for regulation to meet the moment and match and design and be equally innovative so that consumers and small businesses can take advantage of solutions that companies like Neum are bringing to market, like MasterCard are bringing to market. So I have a little bit of an analogy here as well. I kind of think about FinTech in a crisis like COVID as being like this giant well of water during a drought. So then the issue doesn't become, do you have the supply of water? Do you have the supply of innovation? But how do you tap into that water and make it available for those who need it, the people, the industries, et cetera? And the answer is you need the right tools. And right now, some economies have this tremendous reserve of innovation and solutions that will really be game changers in the economies that they serve. But the regulatory framework is constructed in such a way that we can't properly access it. So I have three kind of high level ideas as to how we might be able to work together going forward. I really think we need to look at what's available in the market and make sure that regulation is fit for purpose to encourage investment both from a consumer perspective, businesses, et cetera, into the digital economy. Second is transparent mechanisms to access new markets. So what regulators can do is could a company like Neum serve our businesses, serve our banks, serve our fintechs today? If not, where are the gaps? And part of my remit is to help solve for that as well. And then lastly, my pie in the sky wish list idea, totally unrealistic, but I always like to put it out there. Cross-border payments are such a crucial vehicle for growth and for inclusion. And I think we should really strive to not just modernize within borders, but harmonize across borders. So I would love for ASEAN to be a leader in this here in the Asia Pacific region through the WCPSS and create a harmonized regulatory framework for fintechs, much like what we have in the European Union, because I think that the opportunity to service the underbanked is so tremendous here that it's really the right moment to try and move toward that direction. Really difficult to do, perhaps a bit idealistic, but I think that if anything, like we've talked about, crises like COVID shows that we have the innovation at the ready and we just need to tap into it.
That's a really good point, Kitty. In fact, your last wish list item is something that I've heard a lot over the past couple of weeks about ASEAN being able to drive standards of cross-border data flows. And I think that's an extent. I think ASEAN have really innovated in a way that we haven't seen in other regions with the data management framework, with the model contractual clauses. Is definitely on the wish list for many companies. And we do hope that I think ASEAN member economies can come together and drive that, not only within ASEAN, but also with other countries as well. So we have.
I'd like to add, we're getting started because maybe about the linkage between Bank of Thailand and the mandatory of Singapore. We just linked our fast payment system. So this is the first couple in the world, right? So now in Thailand or in Singapore, you can just transfer money from one to one using the mobile number.
Yeah, I think that's
the first
fantastic.
Step. Yeah.
It's exciting because here in Singapore, fast has just been so crucial to how consumers transact, businesses as well. Likewise with PromptPay in Thailand, and to have Pay Now PromptPay interlinked, and then eventually we'll have players like FinTechs who will be able to provide an overlay service, and you'll have this really seamless, instant, low cost, and secure cross-border payment experience. So I think it's a really commendable moment in our field and really exciting. So congratulations to Bank of Thailand.
So that's the first step, many more to come. Yeah.
Excellent. I thought that QR code payment between Singapore and Thailand was excellent because sometimes when you travel with friends who come from other countries, and then when you return back from your holidays and you're like, okay, I'm supposed to pay you back for the amount for the hotel and all that. How do I make the transfer? It's not easy at all. So now with this QR code payment, it's really made things a lot easier. So we've come to the last 5 minutes of the session. I wanted to give each of the panelists an opportunity to wrap things up, but I think I also wanted to hear your last words around what you think are the biggest unrealized opportunity when it comes to financial inclusion here in the Asia Pacific market, and perhaps what's one way you think we could achieve that unrealized potential. Maybe we'll go with Katie, just to give Vijay a chance to think about it as well.
Yeah, sure. Thank you so much. So I would say, again, that last point around regulation, I think is going to be really key. Having conversations like this where we bring diverse perspectives together. One thing we didn't talk about, we could hop on for another hour, is digital currency. The real-time payments linkage between Singapore and Thailand is so exciting. What becomes really tricky is when we want to do that across multiple markets all at once, and there's so much happening around multi-CBDC, central bank digital currency that I think has great promise in terms of technical solutions for digital finance and then eventually for financial inclusion as well. So that's one, the next hour that we haven't scheduled to talk about.
Thanks so much, Katie. Alison?
Yeah, thank you. Well, first of all, thank you for having me. I'm so glad that I could join all of you. And I think the one unrealized opportunity and that we still have time to realize is recognizing that there are so many tech partners that are really interested in driving social impact, driving scale, and providing solutions that help everyday people to live their lives easier, to become prosperous through commerce, and that we should really start to think about the collaboration opportunities so that we are leveraging where marketplaces have small businesses and providing training and the literacy that they need so that we ensure that there's a stickiness and a sustainability in the digital economy, because that is a growth opportunity and one where we have the opportunity to really change and improve people's lives. And so it'd be fantastic to see more governments and policymakers really encouraging that both public-private dialogue, but also private companies partnering with one another to really drive change and to be a force for good. And I think that it is a moment whose time has come.
Thanks, Katie.
Right. I should say on the perspective of the regulator. So again, I come back to the big philosophy of the central bank is how to balance innovation and stability. So many times people call us like dinosaur because, right? People call central bank the dinosaur. They don't know the technology. They don't know how to innovate. But actually, we try our best to promote the innovation. For example, like again, come to the dance analogy. If you want to dance, if you want to drink, dance and drink in our sandbox. We prepare the sandbox for you to dance and drink. So you enjoy your dance and drink in the sandbox. And once we see that you are grow enough, you're stable enough, then we let you out into the environment, that kind of thing. And a part of that, we also do some of the CBDC project Katie talked about. We have a project with the Bank of China, Hong Kong Bank, Hong Kong Monetary Authority, and also the Central Bank of United Arab Emirates to discuss about how to link the central bank digital currency. So that's kind of thing to show that the central bank is not a dinosaur. We try to be the modernized dinosaur, let's say. So we try to promote more innovation. Again, on the philosophy that we have to also balance innovation and the stability. So that's the regulator's point of view.
Definitely, Vijay. And you guys are definitely not dinosaurs. I know some of the smartest tech people are in MAS and BOT. So yeah, definitely. I think you guys sometimes know more about tech than what people expect. Thanks so much, everyone, today for the session. I had a really good time today on the panel, and I hope that you guys managed to uncover really great insights as well from our panelists. Thanks for joining the FairTech Forum. See you later.